Sandeep, I don't know whether you're aware, we have done sessions before with the ASA. Yeah. This could be our 5th or 6th session jointly with the ASA.
Great. So as you can see, the reports are appearing fairly quickly. Right? So on the front page, we are only showing you 10 entries. At the bottom of this report, you can see
we have 3 more minutes. I'll just quickly outline the flow of the event. We would start off with Mr. Rishikesh Nair, would be delivering the welcome address. Post which we would be inviting Mr. Ambarish Saraf for the introduction of the speakers, and he would be starting off with the introduction of the Chief Commissioner. And post which he would be inviting the Chief Commissioner for his address. After that, we would be, Mr. Ambarish Saraf would be introducing the other 2 speakers from ASA, Mr. Gupta as well as Jayashree. And after that, we would be handing over to Mr. Sundeep Gupta for the presentation. From there, you can take it on. And post just once Ms. Jayashree completes her session, she can take questions from the QA box. So that is what we have planned, and we will conclude with the concluding remarks.
sound good.
Yeah.
Okay.
So the Chief Commissioner is here, Sri M.V.S. Choudary, sir. Thank you so much for joining. We would be starting in another 3 minutes. Participants, thank you for joining us. We would be starting in another 2 minutes. So I just wanted to remind you of the guidelines which you can see on your screen. So please utilize the QA box at the bottom of your screen to post your queries, questions. A few of you have already written to us, which we have passed on to the speakers. And we would be taking those questions. And if you have any queries, even after the program, we would be sharing the contact details of the speakers. You can reach out to them directly. We would be sending you a mail once the session is over. And the speakers have also consented to share the tech, and we would be attaching it along with the email. If you face any technical issues at your end, please let us know through the chat box. You can post it to WTC ID seen on your screen.
Hello, sir. How are you, sir? I'm good, sir. How are you, sir? Hello, sir.
Sandeep, can you please mute the other participants? Thank you. We are expecting Mr. Rishikesh Nair. I've just spoke to him. He'll be joining now. So hope to start in another 1 minute. Yeah, good afternoon, Mr. Nair.
Good afternoon, Vivek.
Yeah, so all the speakers are here.
Okay.
Right. So shall we start?
Yeah, sir has joined.
Yes. Yeah. Okay. So good afternoon, everyone. Pleasure to have you all joining us once again. So I now request Mr. Hrishikesh Nair, the President of World Trade Center, for the welcome address. Over to you, sir.
Yeah. Good evening, everyone. It's a great pleasure and privilege for me to welcome you all for this webinar organized by the World Trade Centers of Bangalore, Chennai, Kochi, in association with the Indo-American Chamber of Commerce. For those who are new to our programs, we are the licensed partners of World Trade Center Association New York. And across the world, we act as the promoter for international trade and investment. And our global network spreads over 100 plus countries with over 15,000 WTC professionals. In India, we facilitate the trade promotion activities by partnering with the CII, FIO, FICCI, NASCOM, etc. And in order to facilitate and support these programs, we have different verticals like detailed education services, paid information services, B2B meets, etc. And this will support the trade and commerce in general. Nowadays, today's times, we have tough times, and GST becomes very essential for the Indian economy. If you're looking at the Indian economy in total also, more than 50, I think approximately around 54% comes from the service sector. And GST becomes very essential for the economy now. And the whole economy is dependent on the success of how we implement the GST. It's quite natural that there are many challenges will crop up and many questions regarding the same also to it. So in today's webinar, we'll decode how the export of services comes under the GST and the concerns and challenges in general cropped up with that. I'm honored to have with us the chief guest, Sri M.V.S. Choudary IRS, the Chief Commissioner of GST and Central Excise, Tamilnadu and Puducherry Zone, who will be sharing our views regarding this topic. I'm really glad, sir. Thank you very much for joining and within our short period and accepting our invite and coming for this session. Thank you very much for joining, sir. Let me also take this moment to welcome the other officers from his team, Mr. R. Gopalaswamy, IRS Additional Commissioner, as well as Mr. M.K. Madhivanan, IRS, the Assistant Commissioner. Today's our chief partner for the knowledge partner for our session is ASA and Associates, and we have been associating with ASA and partner associates for coming up with such sessions even in the past, and I'm pretty sure that this time also they have come up with excellent speakers. And Mr. Sundeep Gupta will be the partner joining from Delhi, and Ms. Jayashree, the associate director from Bangalore for this session. I am very excited to work with the IACC Kerala chapter yet again, and their support in having sessions associated with WTC has been a big success in the past as well. I am pleased to welcome Mr. Ambarish Saraf, the chairman, and Ms. Sujata, the secretary for the Indo-American Chamber of Commerce. Finally, let me also welcome each one of you as a participant, and thank you for the interest in joining this program. With that, I conclude and hand over to Mr. Ambarish for the speaker introduction and to kickstart the sessions. Thank you very much.
Thank you, Mr. Nair. Now it gives me great privilege to introduce Sri Mr. M.V.S. Choudary, IRS, Chief Commissioner and of GST and Central Excise, who is a 1989 batch officer from Indian Revenue Service. He is a school and college topper. He is also a gold medalist in bachelor as well as in his master's degree. He has completed MPhil and PhD. Before joining the civil service, he was a lecturer in Central University of Hyderabad. He is a President Awardee in the year 2001 in appreciation for specially distinguished record of service, the only officer to achieve this rare recognition since he has been awarded in the 11th year of service, and it is normally given to officers with a minimum of 15 years of service. He handled critical and crucial assignments in customs, central excise and VAT, held key positions in imports, exports, anti-smuggling, etc. He has considerable expertise in functioning of 100% EOU, SEZ units, and STP parks. He was conferred the Award for Excellence in Public Service during the year 2018 by Deccan Chamber of Commerce, Pune. He worked as a member of the IGST committee as a part of the exercise involved in evolution of GST. On specific request by the government of Andhra Pradesh, he worked in commercial tax department during the period from 2007 to 2011 in implementing VAT Act and to head enforcement wing. He identified a major scam on bogus invoice to the tune of rupees 1,310 crores. He also has varied experience in economic intelligence and investigations. Most of his career, he has worked in anti-evasion, anti-smuggling, and in specific seizure and recovery of foreign currency, gold, contraband goods worth several crores. Received applause from Deputy High Commissioner in India, UK, for the excellence and meticulousness in planning, organizing, and ensuring successful visit by His Royal Highness Princess Alexandria and Sir Andrew Ogilvy to South India. I would now like to invite him to deliver the keynote address. Sir, if you may, thank you.
Good afternoon to all of you. Respectable Sri Rishikesh Nair, President World Trade Center, Sri Ambarish Saraf, Chairman Indo-American Chamber of Commerce, Sri Sundeep Gupta, Partner ASA and Associates, Ms. Jayashree, Associate Director, Indirect Tax, ASA Corporate Analyst, Sri Vivek George, Manager, World Trade Center, and other members present here. My warm wishes and greetings to all of you. It gives me great pleasure to be here this afternoon and utilize this opportunity to sensitize you the various steps that are being taken by the CGST zone, Tamilnadu and Puducherry to facilitate the trade and industry out of issues and challenges or concerns that are arising out of export of services. Before I detail the various steps that we have been taking to facilitate the trade and industry on these issues that are arising out of export of services, I would just, as an introductory remarks, take some time to once again recapitulate. Most of you may be aware on the definition of what is export of service under the Act, but I just thought because it would give me an opportunity to get into the topic through this. See, as we all know, export of service is defined under Section 2(6) of the IGST Act 2017. Basically, export of services means the supply of any service. When the supply of service is located in India, the recipient of service is located outside India, and the place of supply of service is outside India. The payment for such service has been received by the supplier of service in convertible foreign exchange or in Indian rupees, wherever permitted by the Reserve Bank of India. And the supplier of service and the recipient of service are not merely establishments of a distinct person in accordance with the explanation 1 in Section 8. In this regard, it is very relevant to say that CBIC wide circular number 161/17/2021 GST the day before has given a clarification relating to this section, that is subsection 5. Exports of goods or services are treated as interstate supply under GST, and accordingly IGST is charged on export. Export of services may be made by payment of IGST with the claim of refund or without payment of IGST under bond, that is LUT, letter of undertaking. As per Rule 96 of the CGST Rules 2017, an exporter may export goods or service on payment of IGST and claim the refund of integrated tax paid on goods or services exported out of India in the following manner. 1. The shipping bill filed by an exporter of goods shall be deemed to be an application for refund of integrated tax paid on the goods exported out of India if the person in charge of the conveyance carrying the exported goods duly files an export manifest or export report containing the number and date of the shipping bill and the bill of export. The applicant has furnished a valid return in Form GSTR 3 or Form GSTR 3B as the case may be. any registered taxpayer exporting goods or services can make use of the bond or LUTs. As per Rule 96A of CGST Rules 2017, he may export the goods, services under a bond or letter of undertaking without payment of IGST and claim refund of unutilized input tax credit. However, any person who has been prosecuted for a tax evasion or for an amount of rupees 2.5 crores or above under the Act is not eligible to furnish LUT. Now I will detail the various steps that we have been taken here in the zone, Chennai, Tamilnadu zone for the taxpayers. See, most of you might be aware, we have the Seva Kendras are functioning in all the commissionates, divisions and ranges. We are ensuring that trained officers are posted in these Seva Kendras so as to clarify and guide the taxpayers in case they have any doubt regarding filing of returns, details and the documents that are required to be uploaded in the portal for applying for a new registration. However, whenever any technical glitches are being faced by the taxpayers in GST portal, solutions to the possible extent for resolving the same is being immediately undertaken when brought to our notice. If the issue is relating particularly to GST, and taxpayers are guided to register their grievance online, and thereafter the department also escalates the issue to GSTN through the nominated nodal officers. We have ensured that infrastructural facilities are provided for taxpayers to file their returns in the presence of departmental officers if in any case that taxpayers find it very difficult to file their periodical returns at their end. This pandemic that we have seen the second phase and earlier has thrown several challenges for the functioning of the department also while maintaining COVID protocols. But however, during this pandemic situation and lockdown, in order to avoid the physical contact keeping and in compliance to the safety norms for COVID, the taxpayers were directed to contact the Seva Kendras over phone for any clarification on any assistance. During such time and even now, it is continuing, the officers are assisting the taxpayers through any desk virtual mode and assisting them as per their requirement. We have also given a dedicated WhatsApp number 944440480 that is available at all times 24/7 for the taxpayers to send their queries, clarification. Immediately on receipt, the query is examined in detail, and depending upon the nature, like registration, refunds, returns, cancellation of registration and revocation, notification, the various circulars and procedure compliance, the issue is forwarded to the respective jurisdictional officers for resolving the issue. At times, certain clarifications will be replied then and there depending on the issue. The IGST refunds on exports. The reports are received from DGRM by the respective commissioners for verification in respect of exporters who are under the red flag category. Immediately on receipt of this, the field officers are carrying out the necessary verification and are forwarding to the DG arm directly under the intimation to the Chief Commissioner Office for issue of a no objection certificate. This verification, though in the past there have been some delays, but this verification we are trying to closely monitor at the zonal level, and it is being reviewed periodically. The GST refund on account of supply made to SEZ, exports and inverted rate structure. The daily refund report is being received from the DG systems containing pendency of refunds. We are taking division wise, and it is being monitored periodically to ensure that the refund claims are disposed within 15 days from the date of application, even though the statutory time limit is 60 days. In fact, during the May and June, we observed 2 weeks for clearance of all pending refunds. And I'm happy to say that the Tamilnadu zone was in the forefront, and we could clear most of the refund claims except those 15-20 number which had some minor glitches or some discrepancies to be rectified. Otherwise, we almost reached a point of nil pendency, and we are ensuring that though the statutory limit is there, we are still given on an average. Most of the commissionaires in Tamilnadu are able to clear within 15 to 20 days, sir, which is a huge and a considerable feat by our officers. Whenever pendency of refund claim is also increasing due to filing of huge number of refund claims, special efforts are taken. That is, we are providing additional manpower by diverting officers from one place to, so that the refund pendency is brought to the bare minimum and ensure that a speedy clearance takes place. With regard to the GST updates, images are being prepared and the same is being tweeted immediately on our official Twitter to enable the taxpayer to update then and there. Further, in the Twitter, we have created a hyperlink that will be easy for taxpayers to access the relevant notification, circulars, webinars conducted on the recent changes in the GST portal, etc. We have also intensified our regular GST outreach programs that are conducted exclusively for SMEs on sectoral basis for the banking sector, multinational units, real estate sector, etc. Whenever any new provision or change that is taking place relating to that particular sector. In addition, various webinars have been organized by the department during the introduction of e-invoice and other changes. We are also sharing the periodical updates in the social media like television channels, radio stations, and in-house press bites, etc. Periodical seminars or interactive sessions on GST and in particular refund relating to exports are being held with the various export houses like FICCI, FIEO, CII, etc. Further, the export houses have been contacting and have requested them to address their issues, if any. Once the reply is received, the same is examined, and thereafter, depending upon the issue, the representations are forwarded to the GST policy wing at the CBIC. However, whenever any practical difficulties are being faced by the taxpayers with regard to export, complete assistance and support is extended by the officers working in the field formation in the areas such as filing of refund application online, along with the documents that are required for processing, periodicity within which the application has to be filed, validation of their bank accounts, etc. I was just confining to these particular steps that we are taking, and that is what has been requested by me to enumerate the steps that we are taking to sensitize the trade and industry in facing their difficulties. Now, I think the other speakers will be addressing on the other technical aspect. So I'm forcibly restraining myself and not entering into that aspects. With these introductory remarks, I thank once again all of you for giving me this opportunity. Thank you very much.
Thank you, sir. Thank you for such a valuable and detailed insight into the system and process. Now, I would like to introduce the other speakers for today. Let me start with Mr. Sundeep Gupta, who's a partner at ASA and Associates LLP Delhi. Sundeep heads the accounting and business support and indirect tax services in the Delhi NCR region. His unique experience on both sides of the table, industry and consulting, provide him with a 360-degree perspective on all professional matters. In his corporate avatar, he has been responsible for global treasury operations, cross-border M&As, and financial planning and analysis. Sundeep initiated setting up the indirect tax practice of the firm. He continues to be the lead on GST advisory issues. He is a nominee member of indirect tax committees of FICCI, ASOCHEM, and CII for the past 3 years. A prolific speaker on national and international forums on India, fiscal budget, GST, and other regulatory issues. He has also authored various articles on various professional topics. And I would also like to introduce Ms. Jayashree SK, who is an associate director at ASA Associates LLP Bengaluru. Jayashree is a chartered accountant commerce graduate and certified GST professional. Jayashree has 12 plus years of Big Four consulting experience, handling all indirect tax matters, which includes GST and erstwhile indirect tax law consisting of service tax, central excise, customs, value-added tax, foreign trade policy, and special economic zone. She has worked with various multinational clients and was instrumental in hand-holding GST implementation for them. Ms. Jayashree has handled advisory and compliance of indirect tax matters of various sectors, including IT and ITES manufacturing, retail banking and insurance sector, FMCG, real estate, etc. She has drafted and represented various indirect tax litigation matters also. I would now like to invite Mr. Sundeep to take over. Thank you.
Thank you, Mr. Saraf. Very good afternoon to everybody on this webinar. Respected Mr. Choudary, Chief Commissioner of GST and Central Excise, Tamilnadu and Puducherry Zone, Mr. Saraf, Chairman of IACC, Mr. Nair, President of the World Trade Center, my fellow panelists, coordinators, organizers, and all the people attending this webinar. A very good afternoon to you. Before I request my colleague Jayashree to take you through the various nuances and intricacies of the topic under discussion today, which is export of services under GST, the concerns and the challenges, I would like to share a few of my thoughts, which would probably act as setting the tone for the meeting, as also the headline of why this particular topic is so relevant in today's time. Especially the timing, I would say, is extremely perfect, and my kudos to the organizers, IACC and WTC, for this. And why I say this, because the various challenges which the exporters have been facing in the recent few years, I mean, I can also say under the service tax era as well, some of them have been laid to rest very recently by the decisions of the council held on 17th of September, for which the clarifications have come out very recently. So I would say the timing is very, very appropriate. But having said that, why the services under GST are extremely important is because now the service sector in the share of the GDP is more than 52% today, sitting today. And that itself shows the importance of the service sector in the growth of our country, so to speak of. And out of this, the export from the service sector in the software and the ITES sector alone accounts for almost like 133 billion US dollars. And these figures are of 2021 fiscal year, obviously. But this would give you an understanding of the quantum of impact which service sector has, not only on the GDP of our country, but also on the export sector. And that makes it extremely critical that the tax positions taken under GST are not just a trade facilitation measure, but they are actually proactive in helping our country in increasing the exports to rest of the world. And how is GST, you would ask, important from this perspective? Now, GST is a cost, it's a tax. As long as it's a trade between two parties in India, of course, there are set-offs available and it's a pass-through cost. But the moment we say that the tax is going to be levied on an export transaction, the recipient of this service, the customer of this service, would be sitting outside India, and he would not be entitled to a set-off from the Indian taxes. And what does that lead to? That leads to not only an increase in cost of buying service from India, it actually also works towards reducing the competitiveness of the Indian export industry in the service sector, and especially in the IT, ITES, or any other kind of a service sector which we will talk about. To plug this, the measures taken under GST, I would say, are pretty laudable. The recent clarifications which the ministry has come out post the decision of the GST Council are very laudable. I would also like to compliment respected Mr. Choudary sir on what he spoke about the various trade facilitation measures which are being proactively taken in the jurisdiction of Chennai, of Tamil Nadu and Puducherry, that's very heartening to note. And especially heartening to note is the aspect of the refund, the early expediting of the refunds which he is managing to do in that particular region. Refunds are, again, I would say, a very critical aspect of the working capital management of any export industry, of any export house, whether it's an export of goods or an export of services. But I will restrict myself to talking about export of services only, because that is the topic under question. The greater the delay in the refund process, the higher is the working capital cost of the exporter. And we all know, being finance people, the higher your working capital blockage, it will lead to increase in costs of servicing. And that leads to, again, a higher pricing, leading to uncompetitiveness in the global markets. Now, when I say all these things put together, please understand that it's a very vicious circle. Anything in this cycle of the chain breaks down, it will result into a higher cost, resulting into uncompetitiveness for the export industry. So it's very, very critical that the challenging issues, the ambiguities surrounding the refund process, surrounding the services exported from India to other countries, these are addressed not only in the right way, but in a timely way as well. Both these aspects are equally critical. Under GST, while the law has been more or less taken from the earlier regime of service tax, as was amended from the POPs rule of 2012, the place of provision of supply rules. More or less, it has been a lift off from there, because the stage was already set under the service tax era. But a couple of very important changes have also been made. One of them is with respect to cross charge between two establishments, one in India, one overseas. And those are the issues which, normally one did not have to grapple with in the service tax era. Another aspect is with respect to, while service tax permitted single centralized registration all across India, GST necessitates, by the very nature of its structure, multiple registrations in different states. Now, here the issue becomes very, very critical, and my colleague Jayashree will speak about it more with a case study in the subsequent slides, that it is very critical for an exporter to understand the nuance of this, that the billing entity and the servicing entity into India have to be same. If not, the implication of cross charge will arise. And if these things are not taken care of, in all probabilities, there are going to be queries and a very high probability of the refund of the input taxes being denied to you because of inadequate structure of the transaction flow. With these thoughts, I would like to, invite my colleague Jayashree to take you through the various aspects of the challenges in GST refunds, the challenges and the ambiguities which we face while talking about exports, and especially the intermediaries, which has been like, a bone of contention for many, many years now, settled to some extent recently with the clarifications which have come in, but still a lot of gray area remains. And a few instances of dealing with establishments of distinct persons, as Mr. Choudary was talking about. These are the aspects which everybody, every industry, every exporter needs to be very aware of. They have to take cognizance of this, and they have to plan their documentation and structural flow of the transaction in a manner which is within the framework of the GST law, which is within the framework of the provisions of export of supply of services, zero rated supply, and also confers the boundary of the refund processes which the rules and the acts talk about. With these words, I would like to hand over to Jayashree. Jayashree, over to you.
Yeah, good afternoon, everyone. So as we discuss, the topic of today's session is on export of services under the GST framework and what are the concerns and challenges. So let's move on in terms of the next slide where we discuss the topics. So basically, first we are going to cover the legal background, which actually Mr. Choudary already covered, and probably I'll touch upon which has not been discussed in detail. And second is a scenario where we will be discussing on the export of services in terms of the branch office and liaison office is concerned. So what are the GST implications thereon? Third is the intermediary services. So as Sundeep also was mentioning, so intermediary services is something which is ambiguous in nature in terms of export of services are concerned, and there are a lot of issues which arises in the definition of intermediary services. So we are going to discuss about the definition, the advanced rulings, and the recent circulars which we had discussion about. And fourthly, we are going to talk about the export refunds, because export of services, the refund is the crux of things. So we are going to talk about the two ways of the export refunds, and what are the documentation requirement, and what are the conditions which needs to be satisfied. And the other point would be on the challenges and takeaways in terms of intermediary services, and also in terms of export refunds. And lastly, we've also put certain scenarios or a case study kind of a thing to understand what is the GST implications in these particular situations are concerned. So let's move on to the next slide. So let's come to the legal background, because understanding the legal background under the GST for us to really go ahead on this particular session is very important. As Mr. Choudary already mentioned, export of services has been defined under Section 2(6) of the IGST Act, and there are certain 5 conditions which needs to be satisfied to ascertain the transaction as export of service or not. Firstly, it's the location of the supplier has to be here in India. Second, the recipient of the service has to be outside India. And third, the place of supply has to be outside India. This is a very important point. The place of supply has to be outside India. And the fourth condition is that the foreign proceeds or the receipts has to be in a convertible foreign exchange or in INR, but as permitted by the RBI. So there's a precondition to it. And the last point is the supplier and the recipient should not be a mere establishment of a distinct person. So these are the 5 conditions which needs to be satisfied to take the benefit of export of services. And the next point here is export of services under the GST law is always considered as interstate supply. So there is a taxability and interstate supply. And the second is that Section 16 also states that this export of services would be termed as zero rated supply. So it's a taxable supply, but it will be considered as a zero rated supply under the GST framework is concerned. So we did discuss the place of supply outside India is a very important point. So generally under Section 13 of the IGST Act defines what is place of supply. And there are certain exceptions which has been carved out until subsection 13 based on the various types of the supplies and what are the place of supply for such supplies are concerned. And the very relevant for our topic, our discussions are concerned is the intermediary services. Here, the intermediary services, it's an exception to the general rule. And what is a general rule? A general rule for a place of supply is the location of the recipient is the general rule. But however, for intermediary services, as I said, it's an exception. So the place of supplier is the place of supply. So this is an important point for us to discuss further. And as we say, there are export of services. There are 2 ways of refunds that has been prescribed. One is with payment of GST, another one is without a payment of GST. And both of it has its own conditions and documentation which needs to be adhered to. And lastly, so as we discussed, the refunds would be given on the input tax credits that is available in terms of the purchases are concerned. So let's move on to the next slide. Okay, this is a scenario where we discuss in terms of export of services between a branch office and head office. So in this particular scenario, which we are discussing, either the branch office or the head office, one unit is here in India and the other unit is outside India. In such scenarios, what is the GST implications is something which we are going to discuss about. So if we really look at the export of services and the last condition, which I was referring to, where the supplier and the receiver should not merely be an establishment of a distinct person. So that is a precondition which has been there. So if you go by the interpretation of the explanation 1 to section 8, we can also ascertain that any supplies between a branch office and head office will stick to that particular explanation, and such supplies becomes taxable. So that is what existed from 2017, July 2017 till July 2018. But however, the CBIC, the government, released a notification 15 of 2018, sometime in July 2018, where they bought this particular supplies under the exemption category. So under the notification, this particular supplies between two establishments, they have put it in the exempted categories. So in this, as it stands today, so such supplies between a branch office or a head office or vice versa would be considered as exempted supplies. And this also has been withheld in the Kerala advance ruling in the case of Sutherland's Mortgage Services Inc., where this position has been affirmed even by the advance ruling authority. So this I can say is something where the position has been kind of put to rest. So let's move on to the next slide, where we talk about export of services in the case of liaison office and a head office. So we also understand that there is a difference between a branch office and a liaison office. So as per the FEMA and RBI regulations, liaison office has a limited activities to be undertaken, and it cannot carry any commercial activities, and it would be considered more as an extended arm of a hedgehog. So it won't be considered as a separate unit per se, and it's not been permitted as well. So what would be the GST implications in such scenario, where it's a supply between a HO to a liaison office or a liaison office to a head office? In such cases, what we can ascertain is, since this is a supply to a head office itself, so there is no supply per se. And secondly, there is no commercial consideration which is flowing between a liaison office and a head office. So, so the question of the supply or a consideration would not come into picture at all, and this will be considered as not a supply per se in the first instance itself. And there have been certain advance ruling also in this particular favor. In the case of Rajasthan advance ruling, in the case of Habuha Mebilin BV, and Tamilnadu advance ruling in the case of TACO Holding. And there has also been a latest advance ruling in the case of the World Economic Forum, as latest as August 2021, where it was held that liaison office is the supply between a liaison office and a head office is not a supply, and it is as good as rendering services to the self, and it won't be considered as a supply for the GST purposes, and hence GST is not payable on this particular supply is concerned. So, but however, there was a Karnataka advance ruling authority which was adverse in this particular position, but the appellate authority of the Karnataka withheld this particular position is concerned. So we can also say there is some kind of finality in this particular matter as well. So moving on to the next slide. So here is a scenario where we are discussing in terms of what are the cross charges from the Indian head office to a group companies overseas group companies. So there could be certain instances where the Indian head office incurs all this common IT management cost and infrastructure cost from here in India, and then such cost gets moved to the group companies are concerned. So the question here is whether this will really take a character of export of services, whether such cross charge has to happen. If the cross charge has to happen, what is the valuation that needs to be adopted? So this is the question which arises in such scenarios of concern. So it is to be noted here that under the GST law, we have Schedule 1 of the CGST Act, where it identifies that any supplies between related parties, even without consideration, would be considered as supplies, and GST has to be discharged towards the same. So there is a deeming fiction which arises in this particular scenario's concern. So, so the head office has to really cross-charge to their group entities and concern. So that is something needs to be done. But of course, if the conditions of export of services, all other 5 conditions are satisfied, where the amount has been realized in foreign exchange or so on, they can then it can take the color of export of services and the benefits goes on. And what is the open market value which needs to be adopted is a question here. The valuation which has to be adopted has to be the open market value, because that is the that is the prescribed as per the rule in terms of the related parties is concerned. So this is where the Indian head office has to really look at such scenarios, or cross charge needs to be done, and how it has to be catered in their particular scenarios or concern. So let's move on to the next slide. Yeah, this is a very important topic when it comes to export of services, because intermediary service is something very ambiguous at this particular point in time. Probably it was ambiguous at the service tax era also, and since the definition continues under the GST era as well, predominantly, the confusions and the ambiguity for the trade and industry, it continues as on. So let's discuss what exactly is intermediary services definition is concerned. So section 213 of the IGST Act defines what is intermediary service, and what are the precursors of the definition is that the intermediary means a broker, an agent, or any other person who arranges or facilitates the supply, and also renders the supplies on his, who doesn't render the supplies on his own account. So these are the three important criteria to form who is an intermediary as per the GST laws concerned. But since this definition is so exhaustive, that is where this Pandora's box arises, and there has been a lot of interpretations depending on this particular definition is concerned. So there is also a thin line of difference in terms of identifying who's the real intermediary and who supplies on his own account. So these are the questions which arises because of this definition. And why this definition is important, and why is this place of supply important? Because the place of supply, as already discussed earlier, for intermediary services, it's the location of the supplier. So if I'm rendering the services from India to a foreign recipient, so it is a place of supply happens here in India. So then in that case, if I get identified as an intermediary, then that such supplies will not be qualified as export of services. So there's a challenge, because to that extent, the GST at the 18% or so on has to be payable. So that is the that's an important facts which remains in this particular intermediate services are concerned. But however, there have been a lot of advanced rulings and appellate advanced rulings on this particular issues concerned. But I could say it's a mixed bag of rulings, because there have been favorable rulings and also advanced rulings in this particular aspect is concerned. So let's move on to the next slide, where we discuss about the favorable rulings in terms of intermediary services are concerned. So there is a Maharashtra advance ruling in the case of Asahi Kasai India Private Limited, where the applicant was rendering post-sales support activity services, and the advanced ruling authority in this particular case held that the services rendered by the applicant is not on a principal-to-principal basis, and hence it takes the color of intermediary services and thus liable to GST. So there's another service tax tribunal decision, Delhi tribunal decision in the case of Verizon, where the same approach was made in terms of saying that this will not qualify on a principal to principal, this will qualify as a principal to principal basis, and intermediary is not something really kicks in here, and it's not a taxable supply per se. So these are the two favorable rulings which are kind of existing at this particular point in time. And further, there is a Bombay High Court petition being filed on the constitutional validity of the place of supply in the case of intermediary services concerned. But however, the two judges of the Bombay High Court had a divergent view. One was saying it is valid, the other judge was saying it was not valid. So there was a divergent views. So, but we are expecting that this case will be referred to the larger bench because of the divergent views. This is in the case of Dharmendra M. Jani. So we have to really wait for the larger bench decision on this particular aspect. Moving on to the adverse rulings. So there have been quite a few advanced rulings in terms of intermediary services concerned, and the main, the first which usually comes on this particular list is the Airbus Group India Private Limited, which is a very latest ruling from the Karnataka Advanced Ruling Authorities, wherein this particular applicant was into global sourcing support from India to their global counterparts are concerned. So here, the consideration, though it was on a cost-plus model, the Advanced Ruling Authority held that based on whatever these supplies which has happened from this particular entity is concerned, takes the color of intermediary, and it was held that it's not on a principal-to-principal basis, and GST is payable on the same. So next decision is on the Infinera India Private Limited. It's from the same Karnataka Advanced Ruling Authority, where the applicant was doing a pre-sales marketing activity services to their Infinera US is concerned. In this case also, it was held by the authorities that it is an intermediary services and liable to GST. So here, the authorities also did not really go by adjustum generis in terms of the interpretation of the intermediate definition is concerned. Moving on, so there is another decision, Territex Trading Private Limited in the same Karnataka Advanced Ruling Authorities, where the applicant was actually into supply of goods and services. He was facilitating the supply of goods and services between the Indian buyers and the foreign suppliers, but the consideration was based on a commission model. So here, the Advanced Ruling Authority said that these supplies will really get into the mode of intermediary services because the commission model and the way they're facilitating the services, and it was held that it is an intermediary services. So as we discussed, there have been favorable rulings and advanced rulings, but it all depends on the facts of the case, because that's very important, because it all depends on what the facts and the ground realities of the activities, and then the ascertainability of the intermediate service comes into picture. So let's move on. So probably what I have identified here is what are the triggers or the indicative criteria in terms of intermediary services are concerned. Though we have very less advanced rulings, what we already discussed. So based on the judicial precedences under the service tax era, it has been identified, certain parameters have been identified as to what will constitute as agent, what would not constitute as agent or broker or intermediary supplies are concerned. So predominantly, so it is the recitals or the terms of the contract which is important to identify it as whether it's an agent or not otherwise. So, and what are the intention of the parties, and what are the surrounding circumstances in the course of dealings between the parties, and whether the agent has the control and possession over the services rendered on such supplies, and whether the agent also is contractually binding the principal in terms of the act of his concern. So these are the few parameters we can think of that this will really lead into intermediary or not as intermediary is concerned. And what are the certain parameters which may not really get into the intermediary, which we can think of as if it is merely canvassing or marketing for the orders and the forwards, it may not really take the character of an agent. So, and what is the privity of contract? So is the privity of the contract between only the customer and the principal, or is agent also involved? So this also might be a condition we can think of. So these are the we can say indicative parameters which we can think of based on the judicial precedents that could trigger the intermediary services. Now let's move on to the recent circular. We did discuss, Mr. Choudary also discussed, and Sundeep also did mention. So we had a very recent circular on 28th September on circular 159, clarifying certain aspects of intermediary services. Since we thought it is very relevant, we have put across those points as well in the presentation. So these are the points that has been briefly we have put across what are the discussions in this particular circular is concerned. Firstly, it says that there should be minimum 3 parties. That is the supplier, recipient of a main supply, and the intermediary. So 3 parties is a prerequisite to qualify as intermediary also. And the second is 2 distinct supplies. So there should be a main supply, and there should be an ancillary supply which of arranging or facilitating this particular main supply. So there should be 2 distinct supplies. thought. So it also clarifies that intermediate service provider has to have character of an agent or a broker. So it is more of a non-inclusive definition which needs to be looked into, and it has to be more like precise in terms of agent or broker, and that would be the nature which we can think of. And fourthly, it also says, clarifies that such services should not be rendered on the own account. So such services has to be ancillary to the main supply, and it's not a principal supply per se. And it also clarifies on the point in terms of subcontracting. So there have been certain confusions in terms of whether subcontracting also will qualify as intermediary services. So that has been specifically clarified here, that subcontracting will partake the character of main supply. So it won't be considered as intermediary service, supplies as such. So, but the circular also has given certain illustration, inclusive illustration or indicative illustrations to explain as to what would constitute intermediary and what would not constitute intermediary. So, so this is a very welcome clarification. I could say that at least to that extent, the industry or trade is able to really recognize their particular supplies, whether it will really fit into this particular basket of intermediary or not. Okay, so let's move on to the practical takeaways in terms of intermediary is concerned. So if what we would urge the participants or the trade is that it's better that they re-evaluate their particular agreements wherever they see that there could be a possibility of intermediary kicking in or something similar to it. So they can re-evaluate the agreement to say whether the intermediary services is really relevant in their particular supplies are concerned. And we also see many instances that there are very vague agreements where there'll be only 2 or 3 liner of the scoping being mentioned in the agreements. So that is something which has to be really looked into. And what are the ground realities of the activities of such services are concerned has to be really documented in the agreement, so that there is no non-alignment of the reality of the activities and the agreement are concerned. So the agreement has to really speak out as to what exactly are the activities being identified and put in there. And in certain cases, wherever transfer pricing is applicable, we also see that the agreements, the transfer pricing studies, they are non-aligned. So that is something which has to be really taken care, and all the documentations, be it agreement or be it transfer pricing study or the invoices or any other purchase orders or so on, all of them have to be aligned and really it has to showcase what is the real activities being undertaken is concerned. So these are the things which has to be really looked into and re-evaluated, so that any supplies of such nature can be identified whether it is intermediary or not intermediary is concerned. So let's next move on in terms of the export refunds. So as we discussed, section 16 also gives option in terms of 2 ways of refunds. One is with payment of GST and the other one is without payment of GST. So without payment of GST is quite a simple one, where you just have certain conditions to be satisfied in terms of export of services and the refund conditions, and you'll be able to get the refund of it. But with payment of GST has become more of a conditional refund, because now only unnotified supplies and notified suppliers have been has been kind of prescribed that only with payment of GST is applicable on a conditional refund. So so it is not that every other suppliers can really go for it, though the suppliers, the class of suppliers and the class of supplies has not yet been notified, but there is a precondition which has been put across for the with payment of GST is concerned. But there are certain conditions which needs to be satisfied, like the supplier receiving the deemed export or merchant exports or advance authorization benefits will not be able to take this particular refund mechanism as well, as per the 9610 of the rules. So these are the 2 ways which we can think of in terms of export refunds are concerned. So here, let's discuss what are the practical challenges or the practical concerns which we have seen in terms of export refunds are concerned. So we also see in certain authorities that a declaration is taken from the taxpayers, that the taxpayer would not appeal against the ineligible ITC based on the rejection of the refunds or concern. This we see is not something which is really in the law or in the circulars or any clarifications for that matter, but this is something unacceptable. Probably the taxpayers can really approach the authorities and say this is something not acceptable, and they really may not give a declaration to this effect. And the second point here is we also see that certain foreign inward remittance advices differs from bank to bank, and certain FIRAs will have the export invoice details, export invoice dates, and so on, but certain will not have. So this, when we really approach the authorities with certain discrepancies in this regard, so there could be some kind of a rejection from the authorities as well. So it's always better that we are ready and approach our authorities and get their concern in terms of what is the real format required, and then approach the banker and get that, and so that it becomes a more smooth way of handling the refunds and concern. And there are certain challenges in terms of BRCs where it's an amount received as an advance. So there is a concern there. So we also see in certain instances that realization in INR happens for export of services, either through a OSTRO account or nostro account. But just to give an information that RBI regulations also recognizes OSTRO account, nostro account as per the RBI master circular, and this is a recognized realization. So we probably, if there is any such realization in INR, the authorities can be explained as to how their particular nostro account works and how it has been realized in INR and how it really satisfies the conditions of export of services. That is to be demonstrated to the authorities. And of late, we are also seeing that certain ex parte refund orders have been passed by the authorities. So in this case, it's relevant that a Bombay High Court decision in the case of BA Continuum, it has been held that without a personal hearing, based on the ground of natural justice, the ex parte refund orders cannot be provided. So this is something which can be kept in mind. And we also see one commissioner appeals order in the case of Drive Distill, where the realization certificate or the refund was rejected for the reason that the realization certificate did not have export invoice details. This is something where we see that such rejections also are happening from the commissioner appeals angle. So this needs to be really taken care of. And if you have an option to put those details in the FIRA document, it's well and good. And the last point or the concern is in terms of the input tax credit on capital goods are concerned, where wherever it is 100% export units, so the accumulation of input tax credit happens, but input tax credit towards the capital goods is something where the refunds are not available. So this gets really accumulated over the years. So here the taxpayers can think of doing some kind of an options in terms of either going for without payment or with payment of GST, and accordingly strategize this particular aspect is concerned. Okay, let's move on to the next scenario where an Indian company has a single agreement for many or a host of services or supplies which happens to the overseas customers concerned. And few of the services might be naturally bundled and few may not be naturally bundled. And there could also be a combination where it would, such supplies might take the character of export of services, and certain services may not really fit into the export of services owing to the reason that the place of supply is in certain cases outside India and in certain cases within India. So what would be the solution for this particular issues are concerned, where you have single agreement, but there could be a combination of all this happening through one single agreement. So under the GST law, it is important to understand what is composite supply and what is mixed supply. Composite supplies are the supplies consisting of two or more supplies, where which is naturally bundled. So the section 8 also states what is the taxability for composite supplies. The the principal supply would be identified, and the tax has to be charged based on the particular rate of supply is concerned. But however, for the mixed supply, which is a combination of 2 or more supplies, which is not naturally bundled. So, but there is a single price to that particular supply is concerned. In such instances, Section 8 says the highest rate of tax has to be adopted based on those combinations of supplies, and tax has to be borne accordingly. So these are the 2 mode of supplies which has been identified under the GST law. So when we really put across this particular scenario is concerned, in the case of composite supply, we have to identify what is the principal supply, and if the principal supply and its place of supply is outside India, then we can take a position that it would really take a color of export of services, and the benefits would be available. So then next comes the mixed supply. So there could be a challenge and there could be some possible dispute, because there could be a combination of place of supply happening in India and place of supply outside India as well. So there could be a problem there. So in order to really get away with the situation, what we would probably advise here is to bifurcate the agreements in terms of supplies where it would be considered as export of services, and another set of agreements or the services which would be liable to GST, so that there is a separate agreement and separate invoices happens, and there is no litigation to this effect. Now let's move on to the last point in this particular topic and the discussion is concerned, where we also see in many export of service industries concerned, and that there could be a single master service agreement to the overseas customer, but the delivery centers might be multiple in multiple states. So there could be multiple state delivery centers, but there could be one MSA, master service agreement, to an overseas customer. So in that case, as we already discussed, GST requires registration for each of the states are concerned, because it's a distinct a person has been identified, and accordingly registration has to be obtained for each of such multiple states are concerned. So here we see that trade has adopted 2 ways of really handling this particular ways of handling this export of services are concerned. In certain instances, we see that the centralized billing happens from one business unit to the foreign customer, and internally the other multiple state business units really cross-charge their particular cost to that centralized billing center, and the centralized billing center will raise an export invoice to the foreign supplier concerned. So, of course, this particular method has certain pros and cons. The pros are that there'll be a single entity who will be billing to the foreign customers concerned, and there are less compliances in this particular aspect, because only the refunds or the compliances, major of it is going to really happen from the centralized billing unit is concerned. But there would be a cash outlay in this particular case, because the other business units are going to really cross-charge to the centralized billing unit, and GST is payable on such particular transaction is concerned. So there would be a cash outlay, but of course the other unit will be able to take a credit of it. So to that extent, there will be a working capital blockage. So there are certain pros and cons in this particular method as well. So there are other ways of doing it. The other method is where each of those multiple delivery centers raises invoice on the foreign customers independently. So what are the requirements in this particular case is that there should be separate agreements, there should be a separate billing and a separate realization. So, and the compliances as well, be it on the GST side, or is it on the STPI annual performance report, monthly performance report, or Softex and so on. So the compliance is going to be multifold in these cases, because each of those multi-state business units have to raise an invoice towards the foreign customer and do it on an independent basis. So here the good side of it is that there wouldn't be any working capital blockage, because every other center services or supplies would be considered as export of services, of course subject to conditions being satisfied. So these are broadly the two ways which has been adopted by the trade in terms of such multiple delivery centers are concerned. I think now we are in the last point of the discussion in terms of sessions. So now we can get into the Q&A session.
Yeah, thank you, Jayashree, for comprehensively covering the subject. We have a lot of questions that have come in. I don't know whether we can take all of those. Probably you can take a look at the Q&A box, and you can, we can choose the questions you'd like. Participants, don't be discouraged. We would be definitely taking this up after the program, and we will also be sharing the contact details of both the speakers to you. And please, please, if your questions are not answered, please contact them directly and get it clarified there itself. Jayashree, you can start the questions.
Yes, I can see certain questions. There's one question where can we claim IGST refund against export of R&D services from EOU unit? Yes, refund of input tax credit can be claimed on export of R&D services. That's the first answer. However, in terms of EOU units is something which has to be looked into, because Rule 9610, as I mentioned, has certain preconditions to be satisfied, because if it is going to be a deemed export or merchant export, or if it is going to be something in terms of where the benefit of advance authorization has been considered and so on. So there are certain preconditions which exist, and based on that, you can really go ahead and claim the refund circumstance. And next, I can also see a question in terms of the refund mechanism for GST inputs from export of services for AE transactions. Okay, AE transaction, what I understand here is associated enterprises transaction. In this case, there is no specific mechanism as such for export to associated enterprises. As we discussed, the export of services condition remains same for all the entities per se. But of course, the deeming fiction is something which needs to be looked into, whether it really qualifies as or a taxable transaction and so on. But per se, there is no specific mechanism which has been prescribed in terms of only associated enterprises are concerned. Another question, what I can see here is, what are the documents required to verify export of services and for GST purpose? Okay, documents required to verify export of services and GST purposes. The documents predominantly are on an overview basis, which is required, I can think of as letter of undertaking, the LUT, which we call it, the realization proofs, which is the FIRAs or FIRCs, the export invoices, and the export agreements, along with the TP reports. So these are the broadly the documents which is required for export of services. And I can also see a question, I have a doubt. In case of filing refund under export payment of tax, do we need to disclose FIRC value to the extent of IGST portion or the invoice value? So for the refund purposes, it is always the realized value which we really look at and apply for a refund.
Vivek, what I would also recommend is let us know how much time do we have. So we'll cover as many questions as we can now. And rest of the questions, if you could compile and send us on an Excel worksheet or a Word document, we would, put down a summary comments against each, which you can circulate to either the respective participant or to all the participants put together. So as because I see in the Q&A box, I already see 21 questions, and some of them are pretty interesting. I was reading through them.
Mr. Gupta, you want to answer a couple of those, because we have 5 more minutes to wind up the session. If you find it interesting, then let's share it with the participants for the benefit of all.
Okay. So I take I'm starting from the last one first. So this is, I find it particularly interesting. How can we take refund of GST credit on capital goods on export of services? Is it rebate route? Now, see, this is essentially a restriction which is placed by the legislation itself. Now, there are two conditions for refund. Refund is for, tax credit when you are exporting with payment of taxes or without payment of taxes. As the law stands, when you are exporting under LUT or bond, which is without payment of taxes, then the refund of ITC on capital goods is not permitted. It is specifically restricted there. Whereas this restriction is not placed when you are exporting under payment of tax. So this is the bit of you could say either a lacuna in the act or there was intentionally put. I would not go into that as of now, but this was there. But please understand, from Finance Act 2021, a restriction has been placed that only specified sectors or specified transactions will be allowed to export under payment of tax. So until date, no notification has come out. So effectively, this loophole has also been plugged as of now. Then I would like to now go back to the top first. We have a lot of questions from Mr. Yanamala. So in case of filing refund under export payment of tax, do we need to disclose it? This has been taken up by Jayashree already. So it's always the realization which has to be disclosed and not the relevant IGST portion. He also talks about for FY 2018-19, the refund claim was with wrong invoices. And now when they are claiming refund for 2019-20, it is being not accepted by the GST portal because it is saying the invoice numbers are duplicate. Now, this is basically a lacuna in the GST systems. My suggestion would be that, apply for the refund under either any other category, or you apply for a grievance to the GST and authorities, because this is something which has to be matched in the database of GST and nothing else. You are not at fault. The invoice have not been used in 18-19, so you can certainly use it for, they pertain to 19-20 and refund has not been given in 18-19. So you are entitled for a refund of 19-20, of course, within the limitation period of 2 years from the relevant tax period. We also have the same question. I am not taking it. There is another one from Mr. Yanamala. Do we need to create application for applying for refund of ITC on account of export of goods services as per the date of invoices or as per date of realization? Now, please understand, the relevant period defines it of the refund which you are taking. So the tax refund of an invoice of an inward supply of September month has to be applied within 2 years. So it has nothing to do with the date of realization, so to speak of. It is with respect to the refund, the invoice date of which you are seeking a refund. A number has been shared by Vivek again. In terms of claiming refund on exports made by one SEZ unit to another SEZ unit, endorsement on export invoices raised by exporter claiming refund on exports made to recipient SEZ unit is mandatory. Now, this depends on case-to-case basis. These are procedural issues. I would not comment too much on it. But yes, whenever any transaction is made to an SEZ unit, and an endorsement on the invoice is always made by the SEZ authority before it enters the SEZ. So these things would be more of a documentary requirement. My suggestion would be to find out from your jurisdictional unit as to what their documentation requirements are. Jayashree, feel free to add, because this is more like your area too. And we are talking of another interesting one is on GST on web hosting services. Now, see, when you are paying for web hosting to a supplier outside India, then it becomes a import of service. So then RCM is applicable. It's not a question of an export of service. But when you are selling the web hosting services from India to somebody outside India, then the relevant place of supply rules will have to be seen under section 13 of the IGST Act. In normal circumstances, why I'm saying normal circumstances? Because web hosting can take on a lot of color and character in terms of transaction structuring. But in normal scenarios, this would fall under the residual category of section 13(2), and it would be treated as a zero rated supply export of service. Input on capital goods refunds, I have already covered. Mr. Sundaresh, YM, I have answered this in my first question. Arun is asking, will the service provided to parent company by subsidiary company located in India is treated as a transaction between distinct persons? Very interesting question, because while the law was very clear, the authorities were, treating it in a different interpretation. But now with the clarificatory circular, which has come out 2 days back, it has been specifically said that any person which is covered under the definition of person under the GST laws, which covers a body corporate, which is a company incorporated outside India, a company incorporated in India, would be treated as different persons, and they would not be treated as establishment of the distinct person. So you are out of that mischief. No need to worry. Go ahead and do your zero rated transaction, take refund, but please adhere to section 2 subsection 6 conditions that Mr. Choudary also spoke about. Those essential conditions have to be fulfilled. Treatment of supply of consultancy services to unit located in SEZ in India, will it be zero rated? Please understand that as per the SEZ Act, there are authorized services which are permitted to SEZ units. So if the specific consultancy service is within the list of authorized services, then it would be treated as a zero rated supply, otherwise not. So always stick to the list which is under the SEZ Act. Zomato or Swiggy comes under intermediary services. Very interesting question, because now from January 2022, the position is changing. The GST Council has recommended that they should pay tax on the full value of the food which they are supplying. But as of now, yes, they are technically treated as an intermediary, but taxed on their own charges separately, though it has of no relevance, because Swiggy and Zomato is certainly not going to export its services and deliver food outside India. Mr. Thomas is asking applicability of GST if agency commission is paid to abroad for arranging and facilitating services. Yes, it would be an import of service. So you are paying foreign currency to a foreign supplier. It would be taxable under the reverse charge method. And why this is the case? Because the circular for reverse charge very clearly covers that services received in India and does not talk about the place of supply with respect to import of services. So there is a bit of a lacuna in the Act and the notifications there, but as of now, RCM becomes applicable. Can you get the presentation? Yes, Vivek has already said it. It would be shared to everybody. Vivek, please feel free to stop me whenever you think.
I think we have run out of time.
Fair enough. So other questions we can take up later.
Definitely. So the objective of programs like this is to, in fact, share all your queries with the participants, the speakers, and address in this forum. But I am also sorry that most of the time we run out of, time. So considering the paucity of time, we need to, conclude the sessions, and this has happened today as well. But as Mr. Gupta said, please feel free. We will definitely pull up all your questions. We'll put it together in a paper and we will send it to the speakers and with your names and details. And let's see if how well they can answer your queries. And we are really grateful to Mr. Sundeep Gupta as well as Jayashree for patiently, addressing this particular topic and answering to the questions to the best possible manner. So thank you so much, both of you. And I should give due credits to ASA and associates, in fact, for proposing this subject to us. And Mr. Gupta said it is actually we proposed, but it's actually the other way. Your firm only proposed to us. But I give due credits to Avinash for coming up with this subject and to the entire team of ASA. And we need support like what you have done today. We need support from people like you to apprise the trade and the business on the latest in this particular topic, because GST is an evolving subject. You can't, you can stop overnight, and things are changing as we progress. So we would, come back to you with more sessions on GST and different aspects as well. So let me also place in record our sincere thanks to our chief guest, Mr. M.V.S. Choudary, and his team, Mr. Swami, as well as Mr. M.K. Madhivanan. I should special thanks to M.K. Madhivanan, sir, for helping us to coordinate with the Chief Commissioner's office and ensuring his presence today. We also place in record our sincere thanks to IACC for their untiring support, particularly to the chairman, Mr. Ambarish Saraf, as well as Secretary, Ms. Sujata, and all their members who have been part of this program, not only from Kerala chapter, from other chapters as well. Let me also thank my team, Mr. Hrishikesh Nair, sir. Thank you so much for your time and your participation. And my colleague Sundeep from Kochi, who has taken good care of this particular session and helping us to conduct in an error-free manner. Thank you, Sundeep, so much. And Sushma too, please, for helping us to reaching out to more participants and getting more participation. We had close to around 200 people who participate, and almost double that number who have registered. So thank you so much for being with us once again, participants. We would be sharing the presentation deck. The recording will be sent to you. Everything will be sent to you. If you need any assistance, please feel free to reach out to us. You can write to sandeep@wtckochi.org. And more events are lined up from World Trade Center. And please follow our social media pages. We would be updating you as well. We would be sending you direct invites so that you can register for those events if you are interested. So you have a wonderful evening. Take good care of yourself. Thank you.
Thank you.
Thank you.
Bye, sir.